The economy is crumbling. The future is uncertain, and car companies are no exception. The veteran business magnate, Warren Buffett, knows this. But what does the billionaire say about the future of the auto industry? Why is he so bullish on Apple stock? What does he know that we don't? Let's find out. It does seem zero-emission vehicles have finally reached the cusp of mass adoption thanks to hyper-productive entrepreneurs in the EV industry. Are there any opportunities either in specific vehicle manufacturers or in related technologies? Warren Buffett points out that the auto industry is just too tough. Let's look at the Ford Motor Company. Henry Ford built the auto world with the Model T, and he brought down the price dramatically and wages rose, along with the standard of living. There was a good book that told the story of Ford. It tells a little bit about Nebraska and Henry Ford and Thomas Edison joining up. 20 years into the business, they were losing money. They had Harry Bennett running the Ford Motor Company. He was on his way to the junk heap when the whiz kids came in, and Henry Ford II, Hank the Deuce as they called him, brought in Tex Thornton and a few people. Not long after, results started coming in. Warren Buffett says, "I was reading the other day. Actually, the 1932 annual report of General Motors. It's one of the best annual reports I've read. A completely honest assessment of exactly where they were. They had 19,000 dealers then and a population of about 120 million or so. Today, it's now 330 million people. Still, one of the most recognizable automakers in the world with billions of dollars in annual revenue. It's a business where you've got to learn a lot about competitors from all over the world. Germany, Japan, France, the UK, and South Korea. They're not going to give up their market share anytime soon. It looks like there are winners at any given time, but it doesn't get you a permanent place. Warren Buffett says Ferrari is in a special place, but they only sell 11,000 or 12,000 cars a year, and in the US last year, there were over 14 million cars sold. It's a huge market with growing demand. Warren Buffett, chairman and CEO of Berkshire Hathaway, adds, "It's a business where we find it fascinating to be in. We like our dealership operation, but I don't think I can do it 5 or 10 years from now." Electric vehicles have been a very interesting development. The accomplishments of Tesla have been nothing short of amazing, and it's no surprise that the company is valued at over $500 billion, even in the midst of the current financial crisis. But at the moment, it's imposing huge capital costs and huge risks, and according to Buffett, we're subsidizing in the United States. He continues, "Some of it's politics like you know, but it's going to be with us. We're not going to quit driving cars. The American public has a love affair with them, but I think I know where Apple's going to be in 5 or 10 years. I don't know where the car companies are going to be in 5 or 10 years, and I may be wrong, but that's the auto business. We have wonderful partners working for us. I don't have to do everything." How is it that Warren Buffett knows where Apple will be in a decade from now? The 92-year-old billionaire owns 915.56 million shares of Apple stock that's currently worth $150.98 billion. That is over 46% of the entire portfolio of Berkshire Hathaway. Berkshire's portfolio includes railroad, energy, business, you name it. But Apple is the #1 stock of the company. That's a huge bet. Is that not near the danger zone? Why would Warren Buffett take such a huge bet on one stock? You know, the good thing about this is that they can grow their earnings to about $15 billion. $700 million, sure, it's outstanding. Warren Buffett says, "It would be nice. Would love to own 100%, it just isn't doable. They're good businesses. To think that our criteria for Apple are different from the other businesses we own, it just happens to be a better business than any we own, and we put a fair amount of money into it. We don't have more money in it than we have in the railroad. Apple is a better prospect. Our railroad business is very good, but it's not remotely as good as Apple's business. Apple has a strong relationship with consumers where they're paying a lot for a phone, an accessory, or a premium service. But these same people pay $35,000 for having a second car. And if they had to give up a second car or give up their iPhone, they would give up their second car." The business magnate points out that it's an extraordinary observation of humans. We don't have anything like that we own 100% of, but we are very, very, very happy to have 5.6 or whatever it may be. But we are delighted. It's like adding $100 million to our earnings. The veteran businessman claims Apple uses their earnings to buy out their partners, which we have to sell to bring the number of shares down. But Warren Buffett indicates that he made a mistake a couple of years ago, and he sold some shares. There are certain reasons why gains are useful to take from a tax standpoint, but with the outcome, it turned out to be a dumb decision. Buffett points out that the Berkshire portfolio is the funds he has to work with, but he also wants to have plenty of liquidity. And beyond that, the sky's the limit. Who knows what the bottom is? Charlie Munger, the most trusted ally, a longtime friend and business partner of the business magnate, adds, "I think one of the main things that is taught in moderate university education is that a vast diversification is absolutely mandatory. But you got to be in common stock. That is an insane idea. It's not that easy to have a vast plethora of good opportunities that are easily identified. If you've got only 3, I would rather be on my best ideas instead of my worst. Some people don't tell their best ideas from their worst, and by the act of deciding, they get to thinking it's better than it is. I think we make more mistakes than other people. That is a blessing to us. We're not so smart, but we kind of know where the edge of that is. A very important part of practical intelligence. A lot of people who are geniuses on IQ tests think that they're a lot smarter than they are. That's dangerous. That's how they pulled a masterstroke investment in the credit card company, MasterCard, that just spiked 503.5%. But the 4 million shares make up less than 1% of their company's portfolio. The next best performing stock is Visa, with ROI currently over 340%, now valued at $1.87 billion. Warren Buffett's Berkshire Hathaway holds quite some high-value stocks, with over 1 billion shares of Bank America Corp. Worth $29.54 billion. Others include American Express, Coca-Cola, Chevron, Occidental PD Corp., Kraft Heinz, Moody's Corp., Activision Blizzard, HP, General Motors, Amazon, T-Mobile, UPS, Taiwan Semiconductors, and many more. So with Apple valued at $2.7 trillion, a wide range of products and services, and plenty of reserve cash to stay afloat in these bear seasons, who wouldn't get on board? Its stock price surged 248% in the last 5 years, while in the last decade, a staggering 879%. The shares are much higher today than the average price over the last 10 years, and in the same period, the share count has been reduced by 40%. Apple was able to reduce its share count by buying back stock to the tune of $548 billion in 10 years. This was no problem because of the free cash flow. Amazing! Because it has been able to accomplish all this, its share price has grown at a rate that is twice the rate of its net income. Its price-to-earnings ratio stands at a boisterous 26.3, but it's not that remarkable since the S&P 500 average is 20.9. That's until you realize Apple has made gains of 32% this year alone, while the broader market averaged 7%. That's over 4 times the market average. The tech giant might have lost 27% of its stocks last year, but it has enjoyed a massive rebound and sustained growth. Apple's future growth would be fueled by an increasing focus on underserved international markets. With new products on the line, Apple is set to maintain a grip on its dominance. The behemoth has amassed an installed base of 2 billion active devices, hitting new all-time highs in each of its major product categories. Coming up next from Apple is the mixed reality headset that combines elements of virtual reality with augmented reality. Who knows what else? Warren Buffett knows this too. He has always been a value investor. One of his favorite quotes is, "Price is what you pay. Value is what you get." He knows a good business model when he sees one. Where do you think Apple will be in 5 years? What about the auto industry? Let us know what you think in the comments below. Like, share, and subscribe to our YouTube channel so you never miss a thing. See you next time. Stay tuned.